It's that time of the year when you obviously want some wisdom for the year ahead. And as we step into Samvat 2082, who better than market maverick Madhusudhan Kela joining in to give us that piece of advice and wisdom for the year forward. Madhu, wish you a very happy Diwali firstly from all of us at ET Now.
Aisha, wishing you, all your colleagues and all your viewers a very, very, very happy Diwali, and may Mata Rani bless with hands full to all who are watching you. Thank you so much for having me here today.
Right, thank you, Madhu. But Madhu, happy ones are the only ones who invested in gold and silver. How do you make peace with that?
No, these are phases of markets and investing career, Aisha. 6 months return or a 1 year return doesn't make winning or a losing bet, right? And any which way, we have always advocated a portfolio approach. So I'm sure people would have had some portion of their money into gold. So, but I think if you look at Aisha, even in the last 5 year, 10 year, 15 year, 20 year, 25 year, any time frame, as an equity investor, I'm not disappointed having a conviction in equity and continue to have that conviction in equity. Because see, at the end of the day, all gold or silver rallies, none of them are based on any fundamentals, right? If I buy a good company, maybe 5, 10, 20 years down the line, that company's earning may go up 2 times, 4 times, 8 times, whatever it is. So the value is actually decreasing of the company which I'm buying. In absolute term, I'm buying the company much cheaper. But when I buy gold or silver, I'm only buying it for technical reasons and not for fundamental reasons.
So Madhu, what do we look forward to the year ahead? Do you think earnings will come back? Because part of the reason that the market went into this range-bound lull is because earnings gave way while the valuations still were elevated. Valuations are a little comfortable now, but the question mark is on earnings.
So we have had a kind of more than 1 year of consolidation, Aisha, right? And we are already in 2026. And we are talking of 2027 earnings, right? So my personal view is that a lot is being done in the last 6 months. If you start from the budget, more than 1 lakh crore rupees of economic incentives in the form of tax cuts were being given. More than 1 lakh crore rupees of GST benefits are being given. All of that will start to reflect. RBI has done a fabulous job of infusing a lot of liquidity in the system. We have had a 100 basis point cut from RBI in the last 6-9 months. We have had a very good monsoon. So I think the earnings will pick up from here, and hopefully over the next 2 quarters, markets will also start to get comfort. And when I look at maybe 2027 as a number, the market is not looking as overpriced as it was looking in 2025 when we made like some kind of a intermittent top. So I am more constructive on the overall earning recovery than what would have been maybe even 6 months before.
Mr. Kela, hi. This is Harsha. Great chatting. So if one were to look at it from a 30,000 feet lens, there's plenty playing out. You're talking of an earnings revival which is likely to kick in. The tariff situation likely has reached its top. Give us your view, therefore. Do you see that the next 3 months the markets will very quickly start pricing in all of these factors, which will likely play out over the next 6 months?
Yeah, Arch, and happy Diwali to you as well.
Wishing a very happy Diwali, sir.
So I would say that markets will be more constructive than what they have been in the last 12-15 months, which I think it was kind of a lull across the indices. We have seen kind of red in the last 1 year. I would be more constructive on the overall market, but the bigger thing will be in India as always. What do you buy? It's just that the market will rise. That doesn't mean that anyone will make extraordinary returns. It's that the companies which you buy on a bottom-up basis or the industries which you pick up, which are going to really have a real run over the next few years. That is what has determined stock returns in the last many years. And more specifically, even if you look at last 1 year, while the markets were dull, but there's so many stocks which you can come across which has given like 30, 40, 50, 60, even 100% return, even in markets like this. So India's story, hers, is all about, even if you have a reasonably good market, like the market goes up 10% from here, let's say hypothetically, for the next 1 year, you will still be able to identify companies which can give us 20, 30, 40, 50% return with the 10% rise in markets.
Yeah.
So, what are those segments, sectors that will lead that revival? Give us a lens into that, because obviously it will be rotational. There will be certain sectors which will benefit disproportionately right off the bat, and thereafter it will carry through across the other ones as well.
So I will want to talk a little bit hatke today,
Sure.
because all the normal things are being spoken. There is so much research which is around there. There is no point really repeating. So there are two things which really come on back of my mind. A, we should look at companies which are really, and this is not, I'm not talking from a 12-month perspective, but maybe from a slightly longer term perspective, the companies which are really, really going to benefit out of this AI usage. Because that is something which we all of us are experiencing, that it is coming, right? Even in my own office, I'm experiencing that how AI is actually making us more and more efficient. So we have to look for companies which will benefit disproportionately, and they will not have to pass on the benefit immediately. So this will be one segment which I think could come out as a big winner. And the other thing which is again linked to it, is the power sector, because I've been reading a lot of global reports and even some local reports that the power consumption, even because of this, because of the AI over a medium long term, could actually surprise the markets. So now the obvious producers of, let's say, solar or thermal, they are all kind of being discovered. But there will be a lot of companies which will benefit. Let's say if I make a case to you today that power cost structurally could come down by 50% over the next 3 years. So a lot of the companies which are actually in the consumption side of the power, they could benefit disproportionately because of this change. So what I'm saying, the obvious things are being discussed, they are being debated, they are being analyzed, I think to the hilt by the market and market participants. For us to be able to make some real extraordinary returns, we have to take a slightly longer term call and slightly futuristic call. And that is where, in my opinion, the real money is.
It is indeed. And data centers, like Madhu, you rightly pointed out, they are the ones which are going to be consuming all those powers, and surely seems like a good bet, and an AI derivative at that. But Madhu, the other leg is also the consumption leg, right? We've talked about the big stimulus which both the government as well as the RBI has instilled. Now, the obvious choice is, your go-to staples, autos, etc. But do you think the other way to play it also could be via perhaps NBFCs and housing-focused NBFCs? Is that a structural trend that you're looking at?
Aisha, we have been quite positive. We spoke in your own channel maybe 1.5 years back about the NBFC sector, and it has done selectively, it has done reasonably well. So that could be a right way to play it. But on the consumption, Aisha, I don't find stocks really attractive. Even when I, let's say, want to go and buy an auto company, can I look at an obvious choice where I can double my money in the next 2 years? It is damn difficult for me to be able to identify and find those kind of bets where I can double my money in the next 2-3 years. So I would say that, and also this trend, Aisha, there's one interesting thing which we are observing, because access to money is coming easily lot of the companies or even smaller companies are able to list on the SME exchange, are able to access capital. So they are, even though the category as a whole is growing, but it is not coming maybe to the entire benefit is not coming maybe to the larger companies, because a lot of regional brands and a lot of regional players are coming up in the consumption sector everywhere. So maybe the opportunity is to bet on some of them, which are very small today, which have got access to capital, and they could make something big out of it.
Mr. Kela, two spaces where you're known to bet big and bet well, and some of those bets have played out beautifully. Manufacturing, pharmaceuticals. Are those opportunities still, are there large opportunities to make large wealth still available in both of those? And when do you see manufacturing revive in significant fashion? Do you have a sense of when that happens?
Yeah. First, that is shifting. When we started talking about manufacturing, it's kind of shifting gears. And I would continue to remain very positive on the overall India manufacturing, because that's the government effort to indigenize a lot of these things are clearly visible. Whether you talk of, some incentives which are given to local companies for manufacturing, for instance, for in solar or cell, there clearly local companies are being given advantage to supply to local markets. There are tariffs, there are PLI benefits which are being given to a lot of manufacturing industries. So I would still bet, but this is very selective words. Can I make a case that you buy anything and everything in manufacturing and you will make money? That is possibly not as easy as it was maybe 4 years back. But I would say there are still opportunities really to benefit out of the niche players which are coming up, which have got aggressive growth plan. And that's where I would say the real bet is really being able to identify an extraordinary entrepreneur who has his soldiers down and who has really a methodical plan for growth. And honestly, what I am able to see, so many new companies coming up, so many new public issues coming up. In the last 3-4 years, there are more than 1,000 companies which have got listed on the SME exchange. Some of them will turn out to be big winners of future.
Madhu, I know you've been very busy traveling, and I'm sure you're meeting some of these SMEs as well. Give us a color, because, like you said, it's about identifying the right stocks within the entire pool. And also, the risks sometimes involved with SMEs. Where within the SME gamut should one be hunting?
So, Aisha, there are variety of companies, and I would not say all the companies which have got listed are really, really good, are fantastic in business models or corporate governance. There will always be bad players who will come in. So you have to be very choosy and selective. What we are able to find, obviously, in industries where there is a tremendous amount of tailwind. So for instance, if I can identify a niche company on the defense side, which is small today, but it has lot of credibility, and it has got really kind of a good product, and it has lot of growth, but the market has not yet recognized, because I said the advantage of buying some of these smaller companies, that they are still not in radar of larger mutual funds, or they are not in the radar of larger larger players. So you can still buy them when they are small. So, and we are also investing in a lot of private companies, to be honest, which will go public, which are very, very small today. So at some point of time, maybe I would like to have a larger discussion with you on the private space. There are lots and lots of interesting opportunity, but one observation which I made, Aisha, and which makes me very bullish on this overall segment, and this is where I want to spend some time, is because some of these people did not have access to capital, right? They could not go and borrow money because they do not have collateral, right? If you, so this is the means have now opened up to actually, if you have a good idea, you can actually go and get 50, 100 crore rupees of capital, and there is not too much like complexities which are involved when I want to list a smaller company. Only you have to get the exchange approvals. Exchanges have become tight, but they are still giving approvals for good companies to list. So on the whole, this is a true bet on Indian entrepreneurship. The entrepreneurs from tier 2, tier 3, tier 4 cities who have large dreams and who have got now access to capital. And if they are in a highly tailwind kind of sectors, I am sure there will be disproportionate winners in this segment in the next 5-10 years.
But Mr. Kela, how do you look at valuations in the existing listed universe where defense is concerned? Do you believe that valuations look okay? And not just that, you spoke about decadal themes, and within that, also curious to know what you think of AI and how are you playing that theme? So just those couple of questions.
So, Harsh, obviously all defense companies are not cheap. Some of them are very expensive. So I did not make a case for the overall defense sector. The case which I'm making at is, the sector as a whole is going to grow. Some of that sector bullishness is already reflected in the large cap universe, and they have become expensive. All I am saying you is that there are lots of private companies, lots of smaller companies which will be there in this segment, which will have kind of a lot bigger growth than some of these larger companies, and that is what we have to identify. On AI, if you look at the world where it is going, that significant portion of American new market cap has come from AI and AI derivatives. Similar thing has happened in India. But when I look at a similar thing has happened in China. But when I look at the Indian universe, there are not too many direct play on AI as yet. So, and I am sure our markets will be no different than what the markets of China or US are in times to come. So we are still working on it. But the obvious beneficiary, which I spoke already, looks like the companies which are going to benefit out of AI usage.
Mr. Kela, the other theme that you've played ever so well and you've been bullish on for quite a while is on the consumer discretionary side, on liquor as a theme and on hospitality as a theme. Some of those themes have played out extremely well. Trying to get your sense, what next? Are those themes still just as lucrative because the market size is just that large? Or do you believe that some of those have unwound and it's time to wait and watch and wait for some execution to play out?
So we are still, as a full disclosure, I continue to like the liquor sector and we continue to be invested in some of the companies, and we have a reasonably long-term view on this sector. So I would, so that's a kind of a disclosure on that front. And otherwise, the other consumer discretionary, we continue to just remain bottom up first. We're not taking really like a big sector call, but wherever we see real bottom up opportunities, we will really capture it.
Madhu, when you look at the year ahead, the year gone by, of course, tested your patience a lot. But the year ahead, what's it looking like? I know you did talk about opportunities within the private equity space, but for the asli hero of the year gone by, which is the retail participant, the SIP investor, they have just come in the market from the COVID lows. They've actually not seen a massive correction ever in their, investment history. What's the word of advice for them?
Aisha, honestly, ऐसा लगता नहीं है massive correction कुछ आएगा.
I hope
because,
so.
see, we have seen, yeah, fingers crossed. We have seen so many challenges, Aisha, if you look at from the market perspective in last 3 years. So many wars are being fought. We have seen oil prices spike up temporarily. We have seen this tariff thing come up. We have seen so much geopolitical, right? And the guys who continued to invest are the ones who have actually made some kind of a portfolio return, who have had a methodical way. And Aisha, this money which we are seeing, which has come up and which looks like disproportionate in the last 4 or 5 years, yes, it is significantly higher than the average money which you have got in the last 25 years. But let's not forget, this is kind of catching up which is happening in this particular segment or asset class, because for the last 20 years preceding this 5 year, our equity allocation was very, very low. And now people have accepted that this is an acceptable asset class wherein lots of good mutual funds are doing great job, and they are able to make on a sustainable basis more return than what they would have made on their FD or real estate or any kind of fixed income instrument. And more people, that's the reason more and more people are coming in. And I would say rightly so. So I'm not really terribly worried or any kind of a crash or these investors who are coming in really losing any disproportionate money. There will always be time correction like the one which we've seen in the last 12 months. So that will happen. But I don't emphasize any kind of a crash. Rather, I'm more optimistic on the market going forward, even from a 12 to 18-month perspective.
So 12 to 18 months forward, Madhu, is it going to be still this range-bound market, or do you have a target for the Nifty in mind?
Honestly, don't have a target for Nifty in the mind, but hopefully we should make a new high in the next 12 to 18 months.
Okay, on that note, Madhu Kela, thank you so much for your time as always. And here's hoping that the year ahead is going to be a prosperous one.
Thank you, Aisha. I'm wishing you again happy Diwali and all the best to you and the entire viewers of yours. Thank you so much for having me again.
Thank you.
Thank you.